Be Wealthy and Smart, episode 1114.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why not all cryptocurrencies are the same, and some will win big. Now, this whole debacle with FTX exchange, I did feature on the last podcast, and we delved into what caused it, what was the problem, what does it mean in the industry. But today, the fallout in the news is cascading a little bit worse because it's come out that FTX had hundreds of companies around the world that they owned, and that the losses are going to be somewhere between $10 and $50 billion. Just Sequoia, a venture capitalist, has written down over $200 million in losses that they experienced. But what I'm seeing is a broad brush of painting crypto as a bad thing because one company had problems. And that's just not correct. So I want to clear that up and talk about what the difference is between what happened at FTX and what's going on in the rest of the crypto industry. Because crypto is not all Bitcoin, it's not all FTX. Cryptocurrencies are different companies with different technologies. It's kind of like saying just because a stock is on the S&P 500 that they're all the same. We know, of course, they're not. There could be a software company and there could be a restaurant. They're both publicly traded companies and they're listed on the S&P 500, but they're drastically different in what they do and in what their technology is and what their strengths are. The same is true of cryptocurrencies. The whole cryptocurrency market is not the same. The technologies are not the same. That would be like the S&P 500. And then you have different cryptocurrencies like FTT, which is FTX's native token. You have Bitcoin, which is the original cryptocurrency. And you have other cryptocurrencies that do other things. They're all different, and they can't be painted with the same broad brush. Just because one publicly traded company like Enron committed fraud and was in the S&P 500 index doesn't mean the whole entire S&P 500 is bad. Similarly, just because one cryptocurrency company misused customer funds or had a Ponzi scheme doesn't mean that every cryptocurrency is bad. And to be perfectly clear, I don't approve of any company that would use customer funds or run a Ponzi scheme or do anything illegal, of course. It also doesn't mean that every cryptocurrency is unregulated, because the truth is, there are many cryptocurrencies that are regulated. They're following bank regulations. And the reality is that our future is going to be tokenized, and assets of all types trade on the blockchain. So, from my book, 3 Steps to Quantum Wealth, I want to read you some excerpts. This is from Chapter 5, Cryptocurrencies Solve Problems. It says, any investment that we make in the future could be tokenized. You could invest in a property that gets tokenized and sold as a digital asset to investors. Or you could tokenize a Monet painting, and people who want to buy a piece of it could buy a tokenized version of the painting. You could divide up a valuable diamond, a vacation condo, or a car. Many things will be tokenized so that you can invest in them in an affordable way. In your stock brokerage account, you will have a wallet, and you will have cryptocurrencies as well as tokenized stock. What is a tokenized stock? It represents traditional securities trading on exchanges, but is verified as authentic and cannot be artificially duplicated, such as we see today with synthetic shares of stock sold in dark pools, which are off exchange and between institutional investors. So there I'm talking about the future and tokenization. And what do we see going on in the very heavily regulated banking industry just this month? We see a report of bank JP Morgan, which has executed its first live trade on a public blockchain using decentralized finance, or DeFi, tokenized deposits, and verifiable credentials. So what did they tweet? Just recently, JP Morgan became the first major bank ever to execute cross-border decentralized finance trades via public blockchains, a significant achievement following the bank's tokenization of money market funds for collateral settlements in partnership with BlackRock earlier this year. The trades consisted of live cross-currency transactions involving tokenized Japanese yen and Singaporean dollar deposits, in addition to a simulated exercise involving the buying and selling of tokenized government bonds. There you go. Just what I had talked about in my book published a year ago. We're now talking about JP Morgan as of November 1st making the first tokenized financial trades. This just happened. This is very big news, and I'm not hearing anyone else report it yet. So behind the backdrop of all this negativity about crypto and FTX exchange, we're seeing a very highly regulated banking industry move forward with cryptocurrency and tokenization. And this is significant. That's because we are in the midst of going to a new financial system. And this new financial system will be regulated, is following banking regulations, and also is embracing cryptocurrencies. Not all cryptocurrencies, but some cryptocurrencies. The ones that I've mentioned in my book that have already been identified as part of the new financial system. Now, how did I identify them as part of the new financial system? Because they were following banking regulations already. Again, a year ago, I wrote about the ISO 20022 standard. What I said was, one way banks are getting more standardized is by adopting regulations that allow them to talk to each other using the same digital formatting. That way, a computer in Singapore can understand the banking instructions from a computer in the United Arab Emirates. These protocols, called ISO 20022, ISO stands for International Standards Organization. The ISO 20022 standard will change the way banks relay cross-border payment instructions. While ISO 20022 is not mandatory from a regulatory perspective, those that don't comply now risk being excluded from international payment systems. The cryptocurrencies that we will examine are on blockchains that may be built for different purposes. Sometimes one has an advantage over another. Out of thousands of cryptocurrencies, perhaps 100 will survive because they have real use cases. In other words, real utility. They do things and they solve problems. Knowing this gives us an edge over many people who haven't studied this. They are likely to be shocked when their cryptocurrency cannot meet requirements for regulations. Please remember that I am writing this book early in a technological revolution and in a volatile world where many things are changing. This is only the beginning. However, we know the ISO 20022 compliant cryptocurrencies are the ones that have already been selected by financial institutions that have to plan years in advance. By 2022, it is estimated that over 80% of high-value transactions will be done using ISO 20022. So you see, one bad apple doesn't ruin the whole bunch, and we have definite technology and regulations that are underway for a new financial system. We're seeing them being implemented right now, behind all of this bad news with FTX. So not all cryptocurrencies can be painted with the same broad brush. They are very different, and some are being adopted for this new financial system. Those, I believe, are going to be the big winners of the future. The real solid investments are the cryptos that have utility. They do things and they solve problems. So when you hear cryptocurrencies painted with a broad brush that they are all negative, don't believe it. It's just not true. The ones that won't survive are the ones that were invented for pure speculation. They were the ones that were created just to get traders behind it to manipulate the price up and down for them to make money. They don't do anything. They don't have any specific technology that solves real problems. That's completely separate from the 100 or so cryptocurrencies out of probably 20,000 that will survive, that do have real utility, that do real things, that can send money across borders very quickly at scale, doing millions of transactions per second, using very little energy, and at a minuscule expense. Those are a huge improvement over the banking system that we currently have, which when trying to send money across borders can unfortunately be faster to actually get in a plane and fly the money there yourself rather than sending the wire. So it's imperative that you really understand what you're investing in and why, and not to paint a broad brush across every single cryptocurrency being the same. They are not. Unfortunately, there are bad apples that are in a bunch that can cloud the reputation of an industry or can make it look bad for a period of time. And that's why I do believe we need regulations to come in and fully regulate cryptocurrency. Make sure that for stablecoins, there is $1 behind $1 of each stablecoin, and that they're audited, and that what they can invest in terms of safe assets to protect their value are also regulated. This will keep people from abusing the system or from doing corrupt or even criminal acts, which we definitely don't want to have. We want to have rules and regulations that companies have to follow to keep them honest, to keep them trustworthy as something that we may want to consider for investment. Just today, Mr. Wonderful, Kevin Leary, was on CNBC talking about the importance of regulations, and I completely agree with him. He said, once we get regulations, that will allow institutional investors to feel confident to come into investing in the crypto space. And the sooner that we can bring in regulations that can clarify which are legitimate technologies and which are just speculative will be a good thing. And Kevin O'Leary said he's headed to Washington, D.C. to insist that regulations get done now, that the time for stalling and putting this off and for reviewing and looking at it is over. They need to be voted into law. After all, the United States has been very slow as a country to be creating these digital laws. Many other countries already have their laws approved. So it's time for the United States to get regulation, give clarity to the cryptocurrencies that are legitimate, and get rid of those that are just speculative trading vehicles. And finally, I want to leave you with a few words from my book about how humanity is being freed from centralized control of money. It says, we are moving from a centralized banking system to a decentralized financial system known as DeFi, meaning no longer will a small group of people at central banks control the money supply. The nature of money is changing, and the way we are going to earn and grow money is changing. Thank goodness. We've been in a centralized control monopoly system that has to be modernized. In the future, banks won't be needed for loans or savings accounts. They may manage money, it may be robo-advised, or we may do it ourselves, but every aspect of financial services is on the table right now for massive change, in a good way. Since the US dollar is no longer backed by gold, it is easy for the Federal Reserve to create unlimited amounts of it and cause its purchasing power to decline. However, with cryptocurrencies, a limited number is created, so they remain scarce and valuable. They are decentralized, meaning there is no central bank or centralized organization that is in control. And they are permissionless, meaning you don't need anyone's permission to transfer them. Not a bank, not Western Union, not the government, not the Fed. Now I want to share with you why cryptocurrency is a great new technology, possibly the most lucrative investment opportunity I've seen yet, and why it deserves your attention and perhaps to be an investment in a portion of your portfolio. So I just wanted to clear that up and show you what's really going on in our banking system right now, with JP Morgan making its first jumps into tokenized financial instruments just this month. At the same time, we have this huge scandal with FTX. Regardless of this unfortunate scandal, we will move forward with cryptocurrency and with a superior banking system that is decentralized and does offer a lot of advantages over our current system. This is an exciting time to be an investor if you know what to look for and if you understand the differences in the technologies. If that's something you want to know more about, check out my book, 3 Steps to Quantum Wealth, The Wealth Heiress's Guide to Financial Freedom by Investing in Cryptocurrencies. I'll leave a link for you in the show notes. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.